Good day, traders. I trust you are all well. I just thought we can have a look at higher time frame charts in the next 15 minutes. Reason for that is, I spend a lot of time with traders, and half of them trade lower time frame charts, and some trade 5-minute charts, but half are trading higher time frame charts, daily charts, and they just, ask questions about the correlation between what we look at on the 5-minute compared to what they're experiencing on the higher time frame chart. So, speaking to a trader last night who trades off the daily, I said the only way you really are going to grasp price action patterns, price action movements, price action strategies is understanding first and foremost that every market, every time frame is just price action. Okay, so you got to underline that everything that we are trading, we are all trading price action. Now, when we put various indicators on, they are just proxies for us thinking through patterns. So when you say, when this particular indicator does X, Y, and Z, I want to take my profits, I want to take a trade, I'm not going to jump in. All that's doing is removing a lot of mental processing and putting it in charge, putting the system in charge of it, and you take your decision off that. So it really behooves you, it's upon you to master price action, because price action overrides any indicator. So by all means, use the indicators, but master price action. Now, how do you master price action? Well, you have to use the 5-minute charts and do the chart and do your chart analysis. Don't trade off the 5-minute, but do your chart analysis on the 5-minute, because there is a lot of movement, a lot of volumes. Every day you virtually will see all the patterns coming up, and the patterns that will ultimately come back and appear before you on any time frame. So when you look at a daily time frame, it's just price action. For me, if you stripped away, the market that is a daily chart and kind of hid all of this stuff, there's no ways of able to tell you, actually, now that's a 5-minute or hourly or daily. It is just price action. So on this time frame, UK 100, you can see the market is going up, pullback, wedge pullback, 1, 2, 3, big bull breakout, pullback, and the market is carrying on. Now, what's the point? The point is, just want to illustrate to you that the info or the stuff that we're talking about on the 5-minute is exactly what you see here. So you have to master price action to understand what's happening in this time frame. So if you kind of just had a look at this and you say, well, what's the big thing that's taken place here? You would have seen that at some point, we got to this double top here, the market pulled back, and the bulls broke out above this little pattern here. So as that was taking place, if you trade in this time frame and you decide to take a trade here, or you are in a trade earlier on, you got to be asking yourself, where should I be considering taking my profits? Boom. Measured move, break out above this trading range. Okay, so market went up, came back, and we broke out above this. Look where the market got to. Okay, so the market has been pulling back at the measured move, and there's a big round number, 8,000 here. But that would have been a good indicator for you. Closer to the time, same kind of thinking, high, low, and you kind of say, well, I want to take a trade. If I take a trade here, how far is it likely to go if the bulls are strong? Well, if the bulls are strong, breaking above the trading range, they want to get to a measured move. There is a measured move, okay? And that's where the market got to. So now you have multiple layers, hidden layers of resistance, that measured move. You have that measured move, you have a 50% extension above that, you have a big round number hidden level. So when the market starts to pull back there, you can't deny what's taking place, but it is happening because the bulls have managed to get to their measured moves. So reversal taking place at these levels, you're going to be saying to yourself, okay, now, what is likely to happen if the bears are strong? Well, the bears have kind of closed beneath the moving average. If today ends up closing on its low, if you just scan your eyes all the way back, when was the last time that we had a big bear candle closing beneath the moving average? You know, it's all the way down here to the middle of December. So it will be a very big thing today for the bears to close down here, because then, you know, they have really changed the structure of the market. There are other levels that they need to get to. So having a look at that trading range price action, the bulls who are seeing all of this, they obviously don't want the market to collapse all the way down here. Okay, this is the high of 2022. They don't want the market coming down here, so they're gonna be defending that. But in terms of the price action structure, if today closes near its low, okay, and if it's a bear candle, so we had two bear candles, and if we then get a pullback tomorrow, okay, Thursday or Friday, whatever the case may be, you now got to be thinking, okay, maybe the bears are now looking and say that's a bear breakout. Okay, just on today, assuming today ends up on its low, every bear will be saying we broke out beneath that level. If today ends up being here, the bears want to get to that measured move. They want to take out that level. And if we have more selling, it just keeps on going a little bit lower. Another market for you to look at, very interesting price action taking place on Hang Seng 50. If you just have a look at it, let's look at where we presently are. And guys who are who were in the Wednesdays at the market show earlier on, we spoke about it when we live trading the market. Basic patterns that you'll be seeing is if a market breaks out, it creates a spike. So there's a breakout, bear spike. Then after the spike, there's a pullback, profit taking, whatever causes it. The market always, George, higher probability, 90% of the time, would like to get to a measured move of that bear spike and the pullback. And it usually creates a channel. Spike and channel patterns are very common. So if you have a look at that, there is the spike and spike, pullback. Where is the pullback? So the pullback is here. And the measured move is in the zone that we're at. Spike, pullback channel. That would complete that particular pattern. Alternatively, once we achieve that and the market continues to sell off, the bears will be saying, actually, let's look at where we started selling off in January. Okay, so we look at that. So the bears will say, well, there's actually a bigger leg here. First leg, bear spike, pullback channel. So the bears want to get down to this level. A lot of things are pulling the market down. Magnets, at this level, we have the big round number 20,000. That's whenever it's It looks like I lost my connection for a few seconds, so thank you for hanging in there. We're having plenty of fun time right here in South Africa. We have what they call load shedding. The national power grid is not coping, so we've just been moved up to stage 6, which means we're getting 12 hours of electricity cuts. 4-hour tranche. You've just come out of one just now, so you got all your generators and inverters and solar panels working, but of course your fiber connection spreads throughout the country, so there's big problems, but we cope with it. So big magnets pulling the market down, big round numbers. interesting enough, this big round number 20,000 is also the midpoint of the 2022 range, and also more interestingly, it is the midpoint of the all-time range of this market on these charts, as far as my broker is concerned. So it's a huge magnet that's going to pull the market down. Bears just want to smash through that and then continue to sell off. Bulls want to defend that. That's why we have this huge bull breakout here. Okay, so spike channel takes us to that level. There is also, remember, we've got two tools that we use for measured moves. There's the Fibonacci extension and then the retracement. If you just look at the breakout level, like we did on UK 100, so the bears be saying, well, we broke out beneath that. If we just talk about breaking out beneath that, to the end of the breakout, we're in the measured move area. Alternatively, you could go a little bit higher, and the bears could be saying, well, there's our pullback. We broke out. There was a bear reversal. Our breakout was beneath that. Again, we're all kind of creating this cluster of levels here. So we can't be surprised if the market gets there. And I am back again. Really sorry about this, guys. How would we get there? This channel is a tight bear channel. A tight channel is indicative of strength. So the market could keep on doing over, bull candle, bear candle, but keep on going down. And at some point, if the bears are strong, they want to shoot below this. Now, just to illustrate this process of channels, breakout, spike, and channel, just have a look here. Bull breakout, okay? There's your bull breakout. And there was a pullback, bull spike and pullback. And we got into the zone of that spike and channel. There was a bull channel. There was a bull channel that we had, so spike and channel. And instead of just carrying on overlapping, eventually the bulls tried to break out above it and failed, which is what, we're kind of talking about here. The bears can continue with that, but they may try and accelerate down. If they try and accelerate down, we always expect that the first breakout beneath the channel may fail. Okay, so if you're trading on the daily and you're holding on to see what we get, if you get a bear breakout beneath the channel and they follow through, look at tightening your stop, take out some profits because it might just reverse, like happened here. Channel, huge breakout, immediately reverse. So you don't want to give away your profits. As we break out above the channel, just tighten your stops to below that level. Have a look down here, big bull breakout. Let's use this tool first. So if that's the breakout spike, okay, and you could say all the way up to this bear candle to the top, then the market pulled back. Spike, we had a channel. Market created this channel for us. Tried to break out beneath the channel and we failed. But the goal, the ultimate goal for the bulls was reached here. This breakout reached that goal. So if you had a bull and you took a trade here, there's absolutely no reason for you to exit. Okay, all you do is tighten your stop to lower highs to there and to here. Okay, if we had consecutive bear candles, then you can look to get out. But you just hold on and trail your stop up. Eventually, you'd have been rewarded with that, and maybe you'd have held on. If you had exited your trade for any reason, that's perfectly fine. If it sets up again, you got to jump in and take the trade. Again, another one, if you looked at all of this and you said, hang on, market got up here, pulled back. If the bulls I'm going to take that trade. If the bulls are strong, they want to get to a measured move. How far is it likely to go? So if you just did that, okay, that high, that low, taking a trade here, then you just got to kind of agonize. When you get to that test, you can think about it, maybe get out if you want. But eventually the market got to that. So the point is, let's do one more quickly, then I'll wrap up. That high, that low, and if you're looking to take a trade, have a look at this. Okay, look at the measured move was reached ultimately. So these patterns repeat themselves on the 5-minute, they repeat themselves on the hourly, they repeat themselves on the daily. You just got to have to play with this on your charts. These measured moves, spike, channel, leg one, pullback, leg two, all of these are patterns that repeat themselves. So hopefully you found that useful trading on the daily time frame. It is all price action. You can then overlay any other indicator that you want to use to give you further information, but come to grips with the price action. Apologies for South Africa's electricity grid. We are managing through it, but it kind of affects the fiber and the network. Thank you, guys. We will see you later if you are in the shows, later on in the US Open, or we will see you next week. Take care, guys, and bye-bye. Marlon, thank you very much, boss. Cheers and goodbye.